Let's start by putting the focus on commodities exchange major MCX India. They had a strong third quarter coming in. Their profits in fact doubled in the quarter gone by and revenues saw a jump of about 22%. We had a chance to catch up with Mrugank Paranjape, Managing Director and CEO at the exchange, and he told us that he expects the profit growth momentum to continue for the company. Listen in.
So I think if you look at what really makes up the constituents for the profit, on the revenues, they are completely linked to the ADT. We have seen a very healthy growth of ADT in this year. We have no reason to believe that this healthy growth will not continue. And I think the reason I say this is because amongst the various drivers of the volumes, we've seen the distribution piece really kick in, and that's been sort of a result of people combining their memberships, which has really resulted in more members coming onto the platform and larger memberships coming in. But we still haven't seen the full impact of bank distributors. And the other things that we expect will add to our market, especially in terms of new participants and new products, have also not really yet impacted. So I think with so many things still in the pipeline, there is no reason for the volume not to grow at a similar pace, which then leaves us with two other components which make up the profitability for the exchange. As we have committed over the last couple of quarters, we have already moved our entire mutual fund portfolio away from long dated instruments, which means you're going to see very little volatility in the in the treasury returns. There is still some government bonds which we hold, and I think as we move away from them, you will see the overall stability in treasury returns come back as well. Last but not the least, our cost base continues to remain stable. The variable costs, of course, will go up in line with revenue, but the fixed costs, we are committed to not growing them more than 3% per annum. Absolutely on line for that. This quarter, we did have a couple of one-offs, but we are very sure they were one-offs, and therefore the total cost base will remain the same. So put together, revenue growth and ADT growth remaining the way it is, we have no doubt that we can sustain the overall PAT momentum that we have.
Talking about robust volume growth, you said in your statement also that it was on the back of robust volume growth in bullion and energy segments. Do you think that this will be the key driver in Q4 as well, and or do you think that there will be other segments which will be driving the growth in quarter and the whole financial year FY19?
So if you look back at what we spoke at maybe the last quarter results, in our business, it's very difficult to predict what's going to happen in the next quarter. So, when we spoke about the last quarter, the two sectors which were doing very well were bullion and crude and base metals. Nobody predicted that bullion would pick up so well in this quarter, but we did see gold really do very well. There is an expectation that gold will continue to do well in 2019, and therefore, yes, at this point of time, safe to assume that crude and gold will drive the volumes for the next quarter as well. But that really doesn't mean it's something which is a sure shot as well.
Like you said, that crude will be a driving factor for growth this quarter as well. But we saw a phase where crude prices were on the rise, and therefore your growth was driven because of that. But now we are seeing a phase where crude prices are on the decline. And do you think this will sort of impact your growth going ahead?
So I think one very interesting observation we've seen over the last quite some time now is that the underlying price of a commodity is not really a very big driver in terms of the overall ADT. The reason for that is when the sort of price or the size of a contract goes up or down, given that people are essentially using margins for trading, people adjust their volumes in accordance with that. So just the fact that the value of a commodity has gone up or down does not necessarily impact volumes. Yes, if it's a trend, and we always know that